let's go into the operating department in USALI format. So you now understand the structure, how the file is going to look like for you, how it's going to work for you. And then let's go a little bit deeper. So the basic setup in USALI is, as I mentioned, that we have a revenue minus expenses, and we are getting the total departmental profit. What does it mean? On a revenue side, it looks like this. In that file, you will be able to add number of rooms, number of days in a year, in a month. It will calculate your occupancy. You will be able to define the market segment if you have any. And you will be also able to define every income from that accommodation, like extra bed revenue, early arrival, late checkout, pets revenue, everything you will be able simply to calculate in the rooms division tab. What you see here on the right-hand side is that USALI helped us to structure the cost, but it also gives us roughly a guidance on that market segmentation. And this is the USALI art of market segmentation. I have been teaching you how you can handle that. It is the way structured based on that. But in the beginning, I didn't really break this down into the transient and group, but it really helps this structure to the big hotel chain to have a structure also on that market segment side, because if the owner is owning more hotels, they need to have a structure and the same let's say categorization of the revenue. So it needs to be structured in a property management system properly, so it can be recorded also in the same way for every single hotel. And I can, as an owner, understand what kind of revenue I do have from the segment discount or from the government and stuff like that. So the revenue is being structured by the market segment. Then we go to the expenses. The expenses, the first expenses in the revenue management department are the wages, are the salaries, any rewards you're going to have, any bonuses, and also the wage reduction for whatever you have. As you can already see, it has nothing to do how it look like, or maybe as you don't have experience, you don't really feel it. But if you do have experience with accounting, with the typical accounting and with, recording the numbers for the tax offices, it's a completely different structure because we go by department. And you see here, salaries, it's being done on a rooms division on management and non-management. And then you see you have other departments, So we also structure the salaries as per the, let's say, sub-department or a section in a department. We have a front office, we have a guest services, the guest relations, the housekeeping team, we have a laundry team, we have a reservation team, and we have a transportation team. I mean, imagine that you have a hotel with just 3,000 rooms. Then you have to do it. Otherwise, you don't know where to cut or where to add or how to make the things more simpler or how to optimize this. In revenue division, in rooms division, we have the second part of the expenses. And it's operating expenses related to selling a room and accommodating a client inside the room. So as you see, this is the USALI format, okay? We, as an independent properties, doesn't really have to go too deep if you feel like it's not for you. So you can combine it into the small or into the bigger groups. But you see, there are the categories, the cost categories like cleaning supplies, commission, decorations, equipment rental, guest relocation, sorry. So it means if you are if you need to accommodate a client by someone else, a different hotel because you are fully booked, we have a guest supplies, we have a guest transportation, we have a laundry and dry cleaning, we have a license and permits. I mean, there is everything, but it's structured always alphabetically. Okay, very important is, and I need you to remember that, because there is a huge difference what USALI does And what we have been working in the module, I believe it was module 7, about calculating minimum selling price. In a minimum selling price is, in order to do the calculation properly, we have taken our costs and we have been dividing the costs into the fixed and variable. But the USALI format doesn't care about it if it's fixed or variable expense. It feels like these expenses which you have seen now are variable because they are related to operating a hotel, and the rental is fixed and taxes are fixed and insurance of the building is fixed. But it is the categorization inside the USALI format has nothing to do if it's fixed or variable expense. It is simply operating and non-operating. Okay, very important to remember. So it means in USALI format, we take the room revenue. We are in a rooms division, room revenue. We take rooms salary expenses, room other expenses. So it means guest supplies, cleaning supplies, laundry, commission and stuff like that. We do revenue minus, and we are coming to the departmental profit. So it means rooms division, departmental profit. Clear.